Hey, welcome back on the Easy Finance channel. You want to understand bookkeeping but don't know where to start? Then you need to learn about one of the most basic and essential tools in accounting, the T account. In this video, I will explain what T accounts are, how they work, and how they help keep your financial records organized and balanced. By the end of the video, you will understand how to use them and why they matter in double entry bookkeeping. So let's get started. What is a T account? A T account is simply a visual way to represent an individual account in your bookkeeping system. It's shaped like the letter T, which is where the name comes from. The left side of the T is called the debit side, and the right side is the credit side. Every time you make a financial transaction in accounting, it will affect at least two T accounts. One will be debited and the other will be credited. This format helps you easily see where money is coming from and where it's going, and it's especially useful for beginners who are trying to understand the logic of accounting entries. So, the double entry principle. In accounting, we use something called double entry principle. It means that every transaction has two sides, one debit and one credit. This keeps the accounting equation in balance. Let me give you a simple example. Imagine you buy a laptop for your business and you pay with money from your bank account. In this case, you would debit your office equipment account because you're increasing an asset, and you would credit your bank account because money is leaving your account. Both sides are affected and together they reflect the full impact of the transaction. This is the core idea behind double entry accounting. Every debit has a matching credit. The structure of a T account. Each T account has a simple and consistent structure. At the top, you write the name of the account, for example, cash, bank, or rent expense. On the left side, you record all debits. On the right side, all credits. But what goes where? Now, the big question most people have, how do you know when to debit and when to credit an account? Here's a basic rule to remember. Assets increase with the debit and decrease with the credit. Liabilities increase with the credit and decrease with the debit. Equity increases with the credit and decreases with the debit. Expenses increase with the debit. Revenue also increase with the credit. So, if you're spending money on office supplies, that's an expense. It goes on the debit side. But if you're earning money from a sale, that's revenue. It goes on the credit side. Once you understand this logic, using T accounts becomes much easier. So now, let's walk through a quick example so you can see how it works in practice. Imagine you invest $1,000 of your own money into your business. You're increasing the business cash, which is an asset, and you're also increasing equity because it's your own investment. So, you debit the cash account with $1,000 to show the increase in assets, and you credit the owner's equity account with $1,000 to show the increase in your capital. This one transaction affects two accounts, one debit, one credit, and they balance each other out. That's double entry bookkeeping in action. So, why are T accounts useful? Why not just write everything down in a spreadsheet? T accounts help you organize and visualize the flow of money in and out of your business. They also ensure that every transaction is fully recorded with no missing side. That's how you keep your books balanced. Also, T accounts make it easier to spot errors, prepare trial balances, and eventually build accurate financial statements like your income statement and your balance sheet. Let's quickly recap what we've learned. A T account is a visual tool with the debit side on the left and the credit side on the right. Every transaction affects at least two accounts. That's a double entry system. You can track increases and decreases in assets, liabilities, equity, revenue, and expenses. And T accounts help you keep your financial records balanced and organized. If this video helped you understand T accounts, give it a thumbs up and subscribe for more beginner-friendly finance lessons. In the next video, we will take this one step further and learn how to record full journal entries based on T accounts. Thanks for watching and see you in the next one. Bye bye!